Okay, and we want to welcome to our first podcast, Jodi Vermillion.
Hey, good afternoon.
Jodi is a loan officer with RUFOFF Mortgage, and we've worked together since 2005.
Yeah, pretty long time.
I mean, we're both getting older.
And he still likes me.
Yeah, which is actually, that says a lot about a loan officer because I don't like too many of them. So Jodi, let's set the background. How did you get into being a loan officer?
Oh, wow. That's kind of a long story. I think I just told it. We fortunately got to be represented in Real Producer magazine recently, and I kind of told that little story. But previously, I had run a bistro downtown in the short north. It's no longer there. And then going to college, growing up, I always served tables and country clubs and that sort of stuff. So I had that knack for providing elite customer service. I always have, just the details that go into providing that kind of service. And it carried over, and I got recruited to each job along the way to sell wine at one point. And then from a kind gentleman that offered to bring me on board as a green bean in the mortgage business back in the day. And away I went. So I was always good at numbers, good at science. It just clicked for me. I was even a teller in a bank when I was 17 years old. So always was pretty good at the number part. So, and then just add in the customer service and bam, there's a loan officer for you.
So I say that there's always a difference between being licensed to do something and being one.
Mm-hmm.
So what was the process you had to go through to just get your license so that you could be a loan officer?
Well, back in the day, you didn't need a license. So it kind of went in and out based on the laws that we had at the time. So you didn't always have to get licensed, but then you had to study a lot of material that had to do with laws, that had to do with all kinds of things, ethics that are in our business, to take this test of, with information that you'll never use and apply on a day-to-day. It's like a lot of different professions that you take that test for. But yeah, everyone these days that are working as a mortgage banker or broker, that is, has to be licensed.
So what is the difference between a mortgage banker and a mortgage broker?
Mortgage banker, basically everything happens in-house. So, we are taking the application, we're collecting all the documentation, we're processing the file, underwriting the file, funding the file. Everything happens here. So we have control of the process. And then when you send that to a broker, which is not a banker, everything is sourced out. So basically the underwriting gets sourced out. You don't even know which underwriter you're going to get, which a lot of times having that familiarity with the company and their process and how they look at files and underwrite them is huge. It can kind of make the basis for a smooth journey for the buyer.
And I mean, there's places in the market for both,
Mm-hmm.
but the traditional everyday event of buying a home, I mean, I always recommend to my clients to use a mortgage banker
Mm-hmm.
because you're, like you said, you're in control of the process.
Mm-hmm.
But if it's a more exotic product, something like that, does your license cover both of those, or does it only cover just your mortgage banker work, and then you would have to refer it to a mortgage broker?
So currently it covers our mortgage banking work. So we aren't really permitted to broker out transactions to portfolio type of commercial, that type of loans at this time. However, RUFOFF just purchased a bank, so we have a lot coming up that's going to be really interesting, that's going to take on a whole new form that'll offer some portfolio products that we've never had before. So we're super pumped up about that.
What kind of continuing education does a loan officer have to go through, and is that something that the average customer coming in should be worried about?
No, it's basic. It's 8 hours every year that we sit in a day of classes, and basically they teach us stuff we already know, but they just remind us of everything that's serious that we need to know. So yeah, it's every year, and then I'm in 4 states now, so in Ohio, Indiana, Georgia, and Florida. So I have to do continuing education for those other 3 states right now.
Keeps you busy.
Yeah. Well, you got to do it.
Yeah.
We like helping people.
So, so if we were to boil down the characteristics of a good loan officer, I mean, I certainly have my list. My list would be honest, being the first 3.
Mm-hmm.
And then from there, experience or an experienced team that's behind them.
Mm-hmm.
And then I would also throw in that they specialize in a product that helps that client.
Mm-hmm.
What are the things you would look for?
The things I would look for is, well, I always come from my perspective, so it gets a little more difficult, but I know how hard that I actually work, and I will toot that horn. I understand that the real estate agents put in so many hours, spend a lot more time with these clients, and I want to be there when they need me. So if it's on a Saturday in the afternoon or a Sunday in the evening, I know that, Rich, if you text me, how quick do I get back?
Exactly. Worst case scenario, a couple hours.
Yeah.
Best case scenario, and the overwhelming majority of the time, within the hour.
Yeah. So that's the goal, is to be that partner with my agent to make sure I'm meeting or exceeding rather the borrowers and the agent's expectations. So that's one, a committed loan officer, one that's serious, dedicated, committed, believes in elite customer service, and understands the experience from the perspective of the buyer and the experience that the agent's going to get with communication. So all those things are just huge. And those are the kind of things that are going to keep me employed in the future.
So when you were looking, you just recently moved to RUFOFF Mortgage. Mm-hmm. When you were looking to come here, and let's put this out there for someone that might be watching this that might want to become a loan officer, Mm-hmm. What were the things that caused you to come here, or what were the things you were looking for? Obviously, you never get everything you want, but what were the things that you were looking for, again, knowing what you know now?
Mm-hmm. So first thing I think I need to say is, hashtag #1 RUFOFF. But the big thing is that I actually interviewed about 8 different companies. I came from an awesome company. Concord Mortgage Group was my previous company I worked for. Loved them like my family, so it certainly wasn't anything personal. They went through a merger with Union Home Mortgage, and unfortunately it just wasn't the right fit for me any longer. And here's the #1 reason I think I can say. The #1 reason that I loved Concord so much is because it was family owned.
Right.
It was owned by the Braiders. And
Right.
they, their father owned the company, and it's 3rd generation. We've got Noah, Josh that were there, leading us all on.
And for those that don't know who the Braiders are, here in Columbus, they've been around the mortgage business. The family has been around the mortgage business for just decades and decades and decades that they've been around, and they were the prior owners of the company.
Mm-hmm. And Jeff and Scott Brader, but I immensely respect them. They're great people, and all of the friends that I've made there and colleagues that are like family. Still love them to death. But RUFOFF, the thing that I love about them most is that they have that family vibe as well. They care about their employees. They care about the experience of the buyer. They listen. You could have some awesome stallion loan officers, and if you're not listening to those that have their ear to the pavement and experiencing the day-to-day, then you're not going to survive in the future. So some of the things that they've created an advisory board that I'm lucky to be a part of, and they're always listening and they want feedback. Mark Music last year at their holiday celebration stood up at the podium and basically said, I want to hear from everybody. I want to hear how you're doing, and we're going to make adjustments. So they implement change really fast based on facts and their feedback from their employees. So that means the world to me. They've just bought a bank, like I said, that's going to open up a portfolio arm for us, which I always love new creative products. And I love to share them and help people more as they implement them. But yeah, it's just awesome leadership. I respect Clint Morgan and Mark Music as well. They're just, they're great leaders, and I'm happy to be at RUFOFF. It's a great feel.
So let's say that you weren't a loan officer,
Mm-hmm.
and you were starting out on your journey, and you were looking to buy either your own home or buy an investment property. What are the things you would look for in a loan officer, and then maybe tie that back to how that's changed maybe over time? Because I remember when they used to do the breathing loans where you put a mirror under someone's nose, and if they fogged it up, you got a loan. Obviously that led to a big problem.
Yeah.
But
It also led to a lot of opportunity.
It did. It did. Let's pause. And let's begin. So if you were starting all over again, you're not a loan officer, but you still have the knowledge that you do from all those years of experience. And you were going out and you were seeking to find a loan officer. First of all, are you looking for the loan officer or are you looking for the company? Or maybe a mixture of both.
Yeah, actually, that's a really good question.
We'll start with, that's a really good question.
Actually, that's a really good question. So for me, looking for a loan officer, wow, I'd be very particular. So I think the main thing is you're obviously in this market, your reputation is everything. So you're going to look online, you're going to check and see, the reviews and see their positive marks. You're going to ask family and friends and people who have purchased recently, who they used, why they like them, all those kind of, things that go into choosing a loan officer, but the reputation follows. And certainly I'm going to pick the most awesome real estate agent out there to find that property for me. And when I do, a lot of times you're going to have that loan officer you'd recommend.
Right.
And it just depends on if it's the cart before the horse, or actually if they did it in the right, progression of getting pre-approved before you start looking at property, but it doesn't always happen that way. So let's say they got a hold of the agent first because they saw a property online, they're on realtor.com or whatever it is. And let's say they just want to go see this property and they haven't been pre-approved yet. Typically that agent or referral partner for me is going to refer them to me, and that's how they get the introduction. But that's the credibility of the agent as well. And that's where that relationship is immensely important, because I'm an extension of then that real estate agent. So the way that I perform needs to be at that elite customer service level as well, or I'm not a good extension to that agent and their reputation in the future. So there's many different things that would be evaluated. So if I was picking an agent first, with which my knowledge, I don't know.
Do you know any good agents?
I do,
Jodi?
Rich Shearrow, RealtyOhio all day. But for me, it's different later in the game here. There's not a doubt in the world that I'm going to get pre-approved. So, that's just I don't have to, it's hard for me to not.
So on that topic though, if you were looking to do a major rehab, a complete gut rehab on an old house, or you were looking to buy something that's already done, something that's already fixed up, are those necessarily the same bank? Absolutely
not. So the majority of loan officers stay away from rehab loans. They don't want to deal with them. They don't want to mess with them. They don't want to learn them well in the process. They can't coach the agent or the buyer through the process. So if that, it's a big question to ask that loan officer, and if they hesitate even a minute, it's the wrong one.
So certainly I know you do rehab loans. We've done how many?
I don't know.
My goodness, a lot.
I think I did 30 last year,
Yeah. So just because they're a loan officer doesn't mean that they're a rehab loan officer.
Oh, absolutely not. It's a whole different animal.
And I like to point out that just because someone's a real estate agent doesn't make them a rehab real estate agent.
Sure, or a realtor for investors that are looking to develop a portfolio. It's a completely different kind of scenario than a one-by-one buyer just looking to buy a residence.
And one of the analogies that you can use is a heart surgeon's a doctor and a family doctor is a doctor. Now, obviously, real estate agents and loan officers don't go to school for 10 years and go through residency and all that. So, yes, I do understand that that's not the same. But a heart surgeon can do the same things that a family doctor does. Mm-hmm. A real estate agent that does investment can do everything that the real estate agent that does traditional residential real estate can do. But if they have that skill set to do rehab loans, and to do rehab type deals, that's one more piece of the puzzle. So it's not like they're only a real estate agent that does rehabs or a loan officer that does rehabs.
Oh no.
Jodi would be a very unhappy person.
They're detailed.
If she only did rehabs, but she's very, very good at it.
Mm-hmm.
That's one of the reasons that we've worked together for so long is Jodi takes the time to make sure that the client understands the whole process all the way through, and that's
And,
extremely
and so do
detailed.
you. You do an awesome job teeing it up and making sure they're completely clear on the expectation of the journey that they're about to hop on here.
So it's mutually agreed that we're awesome, right?
Well,
So if you were walking in and you were talking to a potential loan officer that you were going to work with,
mhm,
let's start with the easy one. I'm looking to buy the house up the street, and I'm going to put my 20% down,
mhm,
and I'm going to do the old traditional conventional mortgage.
mhm.
What are the kind of questions that you would ask a loan officer in that scenario? And then we'll get more difficult.
A loan officer in that scenario is, what do you need paperwork wise so I can get my pre-approval and make my offer? I mean, it's that simple. Anybody can do that loan. So it's pretty simple.
So let's take it one step further then.
Mhm,
They're buying their first home.
mhm,
And maybe they don't have the 20% down payment.
mhm,
And so they're going to either go FHA,
mhm.
or perhaps they're going to go with some of the other programs. What's it called? Home Possible.
Sure. Home Ready, Home Possible, Freddie and
Yeah.
Fannie.
I mean,
Yeah.
there's all these kind of different products, which we're going to cover in a different podcast. We're going to shoot several of these. But there's all kinds of products for low down payment. So let's play Mythbusters for a minute.
Hey.
You'd be amazed how many people I talk to
Mhm,
that think they have to have 20 or 25% down to go buy a house.
mhm.
Maybe walk through, and let's not get into the products, but walk through the questions you would ask of a lender for someone who's in that situation.
Sure. I mean, I think what I would ask a lender in that situation of someone that I would assume they don't have a lot of money. So let's say they just graduated school, they don't come from a family with a lot of money, and they're looking to stop paying rent and wasting their money, throwing it down the drain on expensive rent, which has been rising and rising, and they want to invest in themselves and buy their first property, perhaps a condo, perhaps a single family, that sort of thing, and move in and live in it for a year or two. The thing that I would ask a lender is, what options do you have for down payment assistance? So the most popular down payment assistance that we really have here in Ohio is Ohio Housing Finance Agency. And they're great people as well, but the income limits are pretty high. So most people will qualify. And it's the only person that's on the loan. So let's say you have a two-person household and they're making, 150 grand a year. If only the primary borrower, only one person is on the loan, that's the only income that we use. So you're okay. And they'll go up to 5% in assistance. There's a few more additional fees, but at the end of the day, they get what they need as far as the down payment, the additional assets that they don't have. Perhaps you can negotiate some closing costs from the seller, not always in the seller's market, but if you can, that's great too, and it lessens their bottom line. So I think from the loan officer, being the buyer, I'd want to know what products that they have for down payment assistance, and I'd want to get familiar with the process and my loan options in regards to FHA or conventional, what the conventional loan options would be with the assistance, with PMI and different options there as well, and see what they knew that way, because it's really important to offer all of the mortgage insurance options, because you can eliminate the monthly and save them in down payment and make the deal much better for them.
So, I mean, I've closed deals even recently.
Mm-hmm.
That by the time all the credits came in and everything else, people were actually coming to the table, with maybe 1% of the purchase price.
Mm-hmm.
Now that's because there's some credits that come back and things like that. Now, VA and USDA are zero down.
Mm-hmm. It's 100% financing,
But
as veterans should get.
yeah, exactly. But so even a 3% down
Mm-hmm.
means that they can bring, like I said, I've seen as little as 1.5% by the time everything was all done.
Mm-hmm.
So you mentioned Ohio Housing Finance, which is sometime in the future you're going to hear us refer to that as OFA,
Mm-hmm.
because it's just what we do.
Mm-hmm.
But almost every state has a state housing finance agency of some type.
Mm-hmm.
Isn't it federally supported
Mm-hmm.
monies?
Through the state, though.
Right. So they offer a down payment program, which in the state of Ohio right now, the down payment ranges anywhere from 3% all the way through 6%.
2.5 to 5.
2.5 to 5.
Mm-hmm.
Okay. So 2.5 to 5% assistance there. That'll help cover closing costs and down payment.
Mm-hmm.
So they also have these special programs, like if someone's a police officer or what's the whole list?
It's policemen, firemen, EMT, teachers, nurses, veterans in that service industry.
So all veterans qualify. Nurses, teachers, firefighters, EMTs. So
we have this list right here.
Yeah, this list.
This is a little bit different of a program. This is Homes for Heroes, which I participate in. I'm an affiliate here in a number of different areas in Central Ohio. And basically, it actually offers a credit towards their closing costs. We usually call it towards their appraisal, but it's a great discount, and they get a rebate after closing as well. So it's an awesome program, and we kind of marry that with the OFA, Ohio Housing Finance Agency, down payment assistance, and then they benefit twofold.
So what are some things that should set off maybe red flags when people are maybe interviewing a loan officer or looking at a website or things like that? What are the red flags that might cause someone to at least talk to their real estate agent maybe and say, hey, what's going on here?
There's a number of things that I would look for when I'm interviewing a new mortgage banker or group that I'd want to entertain. So pricing's huge. You always have to be competitive. So that's a big part of it. It's their basically their philosophy on how they treat their people. I think being that core family atmosphere that they have to listen and implement changes, ask them what the most recent changes that occurred, their software, their origination system, if it's Encompass, their CRM, their ability to track, their leads as they come in. There's just the marketing. Marketing's huge.
And on that topic of CRM, client relationship manager is what CRM stands for. And I've worked with some great loan officers that couldn't communicate. They couldn't get back to people. They couldn't do this. With technology, that's gotten much, much, much better. Because now they can go right on their phone and look and see right where they're at and know those things, where before it was a phone call. I can't emphasize how much that technology and that communication is so important. I mean, Joe's loan office down the street, this software is expensive. It's really expensive. But Joe's loan office down the street, they still need to talk to people on the phone. Now, there's nothing wrong with Joe as long as Joe gets on the phone and talks to people. But if Joe's busy, he obviously can't spend the whole day, hey, here's the status of this, and yes, it's okay, and babysit someone through a deal if they're busy. But that technology, that advancement in technology and those kind of things. So one of the things you may want to ask when you're talking to a prospective loan officer is ask them to show you. Ask them to show you what they have that will keep you up to date, because it can be frustrating. It can really be frustrating if you can't either get on the phone with someone or at least be able to check on them.
Yeah, and it depends on the team and how they've developed their process too, because even though you're at a company, it's not all the same loan officers. Every loan officer has their own rhythm to rhyme. There's still going to be the same process through the loan approval, where we have milestone updates that go out automatically based on the next milestone that loan has taken in the process. But for us, every Tuesday, we're providing a personal update via, a call. So not every team is made the same. So, I think kind of talking about, what kind of communication you provide is probably really important too. You're anxious as a first-time home buyer, oftenly, and that communication can be everything.
So, people sometimes want to shop around. I always tell people I want to be the last one they talk to.
Right.
Because I'll clean anybody's clock.
Yeah.
In that conversation. What is a good number for people to shop? Should they go out and apply with 12 different banks to get started?
That's the thing is that, for us and our team, our commitment to the care model and making sure we exceed, our borrowers' expectations, that's huge. And the service, I believe, is just as important as a rate.
Yeah.
So yeah, the price, exactly. So just because you're out there shopping, Quicken for, an eighth lower in rate doesn't mean you're going to get near the same experience on your process and transaction and communication. Because guess who's at Quicken taking the phone call? It's that other rookie that needs a job to learn how to do loans for a living. So you're not going to get that, level of knowledge, that level of, information, that level of care and customer service. And I think that having that kind of calms the nerves, soothes the nerves, and makes the process an enjoyable one, actually.
So without getting into the intimate details, because obviously we have privacy that we have to be concerned with, but Jodi and I just finished a deal. And in this particular deal, to be honest, the client had shopped the rate that was given by RUFOFF and Jodi, and they were close. It was like a trade-off here, a trade-off there, and that kind of thing. And my client ended up deciding to go with Jodi because he was more comfortable with her style of doing things. So let's fast forward. We get into the deal. He had a pretty good amount invested in it. He had an earnest money deposit down. He had rehab that he was doing on the property. It was a pretty extensive rehab to the tune of...
In what area?
Yeah, in a revitalization area, in a place called Southern Orchards down in Columbus, big up and coming area. And he was going to be on a great deal. By the time this was all said and done, he's probably looking at $50,000 or $60,000 in equity. So let's differentiate the difference between someone who has as much experience as Jodi has and that person who probably was a little bit cheaper. But to be honest with you, it's kind of like spaghetti sauce. It's in there one way or the other. You can have a lower rate, but you've got higher closing costs, or you've got lower closing costs, but your rate's higher. It's in there somewhere. But anyway, this particular deal, everything was going along. We had our problems, but we were getting through them. And all of a sudden, it was like someone slammed on the brakes. We had a major issue and a major problem that came up. If we would have had an inexperienced loan officer in this one, I'm pretty sure that he would have lost all of his inspection stuff. He actually had to pay for his construction estimates because it was that extensive.
In their time, contractors are so busy, anymore these days. Yeah, they're requiring payment for those.
We also had a plan reviewer that was due to be paid.
It was an FHA 203K, so it was a full, what they call a full or a regular traditional standard, if you will. It exceeded $35,000 and a lot of detail, so we had to have a HUD consultant is what they refer them as. So.
Right. So in the end, there was quite a bit of money that was wrapped up in this deal. Plus my time, plus Jodi's time and her team's time. We ran into this major issue, and it was a huge problem. And all of a sudden, now is when we truly earn our money. I had to go do a bunch of things that, real estate agent-y things. You had to go do a whole bunch of loan officer-y things. And we got the deal closed. We got it done. I would lay odds that there's maybe 20 loan officers and maybe 40 real estate agents that could have made that deal happen. Total in the entire city of Columbus.
Yeah, well, and that's how I work. You can always have an issue. You're dealing with people, you're dealing with properties, you're dealing with guidelines and programs. So for me, it's not a matter of being dramatic about running into a wall. It's resolving the issue and moving on. And communicating to everybody exactly where you're at. I always go to my agent first, make sure that they know exactly where we're at.
So she can throw it all on me. It's okay.
Right. Somebody's got to take it. But it's really important though, is to, and I always tell, agents, I do a lot of classes that I teach education that way. But one of my big things is don't escalate drama, because just because you run into an issue doesn't mean that you need to follow their drama with them. As a professional agent, you have to be the anchor. You grab a hold of that buyer. You let them know, I've got your back. And we do. That's what our knowledge is all about. That's what our professionalism is all about. But it's huge, because I've seen it before where we've had, kind of a newer agent that didn't understand what was going to happen next, and they let themselves escalate with the buyer's drama because they just didn't know the answers.
Yeah.
Or if they would have just come back to me, I would have been like, hey, I've got you. Here's what we're going to do to fix this. Because you always run into issues here and there in this industry. It's inevitable.
And it's not a question of if you're going to have one of those major issues occur. Hopefully a buyer that's out there, they're going to buy their home, everything's going to be all peachy and everything's wonderful.
Yeah, we want them all to be like that.
Jodi actually made the comment when we were talking about the old traditional, conventional 20% down loan. Yes, any loan officer can handle that deal.
www.lenderohio.com.
Yeah, there you go.
Online application.
Yeah. So, but you get tested in the way that I evaluate the vendors that I work with. It's not a question of if you do that loan and it's really simple, but when everything hits the fan, now what do you do? That's when we get evaluated on what we do and how good we are. If every deal was a simple 800 credit score refi, your life would be easy. You wouldn't make any money, but your life would be easy.
Yeah, for sure.
Mine, sure, I would love to sell every $400,000 house in Columbus. Same thing, but we get tested when the crap hits the fan.
Yeah, I mean that's probably a part of it that keeps me in the business is that I like solving the puzzle.
Yeah,
I like those challenges. It makes me stand up, and when I have to stand up and resolve an issue and flip, spin, move, shake, whatever, to get something done, I do it. And it's part of the joy, I think, in this business, Yeah.
So we do need to wrap things down and give them a parting shot here. So you would agree with me that first, foremost, and non-negotiable is that the loan officer tell them not what they want to hear, but what they need to hear. So that's what I mean when I say honesty, honesty, honesty. I'm saying if you go walking in and you've got a 518 credit score and, sure, that can be repaired. And we'll cover repairing things in another video. But someone needs to be honest and say, you're a year out. You're a year and a half out. You filed bankruptcy, 3 months ago. You've got a little bit to wait until you're going to be able to get into that product. Honesty, honesty, honesty is the most important. Experience-wise, people have different experiences. So like you happen to have a specialty in certain areas. Understanding the specialty that someone, that a loan officer has, a real estate agent has, is so important to serve your needs. I tell everybody I'm not a good hand holder. And I've worked with you a lot.
It's not true. He's a very good hand holder all the way through the process.
But if you want to know numbers,
that too.
I can run numbers.
And hand holding.
Well, I like to think I'm a badass.
Right. Yes, you are.
Yeah. So, but someone that doesn't match with that, if someone's looking to talk about pretty kitchens, I've built, I had one kitchen that was almost $90,000 in an old house. I've seen pretty kitchens. And so that's just not me. But if you want to talk about a good investment in your home, then that's where my strength lies.
I think that you need to know that all loan officers aren't cut from the same cloth. So that's the key factor. Just because it might be someone's sister, or just because it might just be someone you met somewhere that says, hey, I do loans. You really want someone that's going to guide you through the process, that's going to understand what your goals are and help you meet those goals. So if you're talking to someone, there are lots of questions, ask more questions, and you'll be able to sense from that feedback that they give you if they're, an incredible loan officer or not. If they don't have any answers to your questions, of course, I think as Rich would say, run.
Yeah.
So yeah, I think that's, important. So
there are very, very few loan officers this is my own personal pitch for Jodi here. There are very few loan officers that I enthusiastically endorse. There are certain loan officers that I work with, like, 2-3 times a year because they have a very, very special product. But there's very few loan officers I consistently refer people to, and Jodi has actually survived that. She survived that since 2005, 2006, which that's man world. Yeah, but so if someone wanted to reach out and had a question, obviously if you have questions, guys, you don't necessarily want to bombard Jodi with phone calls. So if they wanted to ask a question or reach out or something like that, what's the best way to get a hold of you?
Yeah, so I have a team. So it's with my direct line, which is 614-363-5771. It rotates through the team. So if forever I'm in a meeting and I can't get to the phone right away and you want to speak on the phone, it will roll forward to the rest of the team where someone will answer. If it's another way to always reach me is via text, I just ask that you give me the urgency. So, if you're looking to make an offer the next day, looking to make an offer that night, or you've got some sense of urgency, I just like for you to tell me what that is. And I give my cell number out. I'd like to be available, and it's 614-206-1687. So you can always text me there. My email is Jodi, Jodi, at RUFOFF.com. So that's Jodi at RUOFF.com. So that's a great way to reach me. And the online application, if you're ready to get pre-approved and want to get the process or the ball rolling, if you will, it's LenderOhio.com. We also have LenderFLA.com. Keep in mind, we are bilingual on this team. Jorge Castillo is my loan partner, licensed loan partner. So he is fluent in Spanish. So he is actually prestamista.com. So feel free to reach out if you have any questions, and his, Spanish is your primary language. Don't be shy to reach out to our team and Jorge as well.
Well, Jodi, thanks a lot.
Oh, my pleasure.
I really appreciate it.
Yeah, as always.
And you're going to be seeing more videos with the two of us. Matter of fact, we might even be in the same outfit because we're shooting these all at the same time.
Perfect.
Later, guys.
Yeah, take
care.